So good morning, ladies and gentlemen. Today I just briefly, how do I move the, there we go. So today I'd just briefly like to touch on where we've come from a payments perspective, what are some of the things that's happening in our space at the moment, some of the key innovations and factors that's driving innovation, and then some of the key impacts we have in terms of payment platforms and where potentially the future will lead us. So we've definitely come a very long way in the payment space in the last 3,000 years. We started with a bartering system, and then we had the shekel, and then it moved to more formalized space, and we had notes and we had coins and so forth. And then you had the first bills of exchanges. But most of these were building blocks. You really only saw the first kick in the hockey stick with the introduction of plastic in the 1950s. My opinion is that that just gave people an easier access to the credit line that they already had. And then from there, of course, the innovation and the invention of the ATM. That increased the number and the volume of transactions in the payment space hugely. People were withdrawing lower amounts, but more frequently. And then, of course, came the internet. So early 1990s, we all had our internet banking profiles. It was a bit of an extension on our current banking, and you could view your balances, and sometimes you could move money between some of your accounts, and eventually we could pay someone else at another institution. And that laid the ground rules for us to be able to start buying and selling online, which was very great. It was very primary, but it was all linked to your basic banking product. Today, we're sitting with online bartering systems again, so I'm not quite sure whether we're just reinventing the wheel all over. So if we look at what's happening at the moment, there is a proliferation of payment service providers out there that is outside of the normal banking environment. These service providers enable me as a merchant to be able to set up shop and receive payment in whichever currency I want within a few hours or days. As a consumer, I am able to buy or sell goods and services online, paying for it in the formal currency by linking it to my credit or debit card, and like a PayPal and a Google account, or I can pay using loyalty or tokens. Absolutely awesome space to be in if you are an adopter of technology. These payment service providers, some of them are localized, some of them facilitate cross-border transactions, some of them are industry specific, so like pay to stay, and others focus on aggregation and billing for content. The key is a lot of them start in a specific space, they start in a specific market with a specific business model, and then start growing and start encroaching on our traditional payment processes. Take, for instance, PayPal with Bill Me Later. I mean, that's credit. And now with the agreement with Ingenico to allow offline PayPal payments. I mean, what are we as the banks to do to enable to protect ourselves? So some of the factors influencing innovation, if you look at what drives innovation. Excuse me. Okay, so the first one is in terms of our market structure. There has to be a willing buyer-seller relationship. I need to have a relevant product on the internet or via the mobile device, and there must be someone who wants to buy that. There has to be a large enough market segment that wants to do business via these different channels. And then, of course, the government structures need to allow for these different forms of payment. We also need to look at infrastructure and the maturity of the markets. Are we predominantly cash-based, in which case we make very sure that we can function that and we can process it? Or is it a market that's more mature and that's moving into the online space? In terms of adaptability, things are changing at such a rapid rate that how are you supposed to keep up? You need to make sure that your products are agile and that you're quick to market in terms of any changes that's required. And then very importantly, and we'll touch on this again a bit later on, is engagement. And what is the format of the market? Is it a collaborative market or is it very competitive? Can I work with a telco or do I need to go and provide my own services? Is there possibility to grow and to work together? And then the culture of the general environment. Is it an innovative space like Korea or is it a quick adapter space like Australia? If we look at some of the things that constrain innovation, demand dynamics. If there's just not demand for the product in that specific space, it is not going to sell. Some of the investments, I mean, a lot of these, and we've touched on it in a few other presentations, a lot of these startups and a lot of these payment service providers are under immense pressure to provide return on investments. you're dependent on huge amounts of volumes. You've got low profit margins and you need the volumes to come through. So you need to make sure that the organization that's supporting you is able to understand how the business model works. And then some of the existing players. What are the hurdles to play in your market? How do you need to be completely disruptive, or are you able to play with those that's currently in the market with just a small distinction in your value proposition? Interoperability, once again, as I've said, do I need to go out and build my own complete end-to-end solution, or am I able to work with others in the space, leveraging existing infrastructure? Key standards is also linked to the previous points, and then scale efficiencies. How scalable are the solutions that are out there? So if we put these together, the three main factors for me are cooperation and collaboration, integration, and then interoperability. So if we look at cooperation and collaboration and how that impacts the payment landscape. So you've got the main players, the banks, the mobile networks and so forth, and the acceptance networks, and those I'm referring to are like retailers and outlets, distribution outlets. Then the different types of models I'd like to propose is that you look at a light integration model, mobile-centric, bank-centric, a partial integration, and then a full integration. So just a few examples. On the light side, we have OboPay, and that's just being able, it's a wallet, and you're transferring money from my cell phone to someone else's cell phone, irrespective of network. There's no bank involved. It is just a facilitation of payments. They do this for other third parties as well, and they do it under their own brand. Then we've got Docomo, and Docomo was a prepaid service initially. Then on the FNB space, we have the e-wallets, which is a bank integration. It's a bank-built application, and I'm not using a specific service network provider. I'm using any of the mobile network providers within South Africa. Then we've got Mobicom Austria, very interesting. They acquired a bank to work with them. So they couldn't find someone who would collaborate with them, so they bought someone. And with that, they've been able to provide prepaid services to their customers, and they're able to facilitate quick NFC processing. And then Docomo again, and the reason why they're here twice is they just don't stop. The first one is they acquired a credit card company, and they provided awesome credit card products via their mobile network. And secondly, they invested in a lot of the retailers to be able to get their NFC infrastructure out. So instead of collaborating with people that don't want to collaborate, they buy a share in the companies and they move on. So hats off to them, they don't take no for an answer. So if you had to look at integration and an integrated model, what would that entail? The first question for me would be, how would we integrate? Are you going to integrate via geographical region? Are we going to integrate via bargaining council? Do we integrate via industry? What would be the integration? Because there's many different ways of looking at this. And as we heard this morning from our colleague from the Reserve Bank, we've got the SADC region looking at leveraging some of the enhancements and some of the benefits, the powerful benefits that you can get from integration. You've got that in the MENA region are doing that as well. And the European Union have implemented their Payment Services Directive. None of these things are clean. None of them are without their issues. But it could be very powerful. There is huge, excuse me, there's huge economies of scale. It's much easier to monitor. It's much easier to track your fraud tracking, your KYC. That's much better. It's an efficient payment system. And for your users, it's much more user-friendly. But what that also means, and that's one of the questions, is does an integrated payment platform mean integrated approach to product development? And how on earth are we going to develop new funky products if we all have to integrate all the time? I mean, we all know these big services and these big conglomerates. You stand in the back of the queue, and if you've got a funky idea and people are scared of it, you're never going to get it in. So that's some of the drawbacks. And then also the hurdles to entry and the pricing and how would all of that work. So there's still a lot that needs to be ironed out. You need to look at servicing. You need to look at delivery. I mean, what they found in the European Union is people just simply don't trust it. So if I'm in Spain and I'm ordering a product from Italy, I simply don't trust that that product will be delivered to me at my doorstep. So that needs to be looked at. Maybe something that we can investigate is an interoperable model. So saying instead of integrating and it's one big platform and it's everything together, we're still all allowed to do our own thing. We can still do our own business models, but we all adhere to a basic set of rules or guidelines that we've all bought into. Now, once again, that's not without its own issues, because you've got to get everybody around the same table, and you have to get everybody to agree to the same rules and guidelines, and somebody needs to monitor and control this. But this potentially could help us build richer solutions in the medium term, shorter to medium term. There's just so much change still happening in the payment space that to try and integrate now might just stifle a lot of innovation. This supports innovation, it allows for new entrants into the market, and it allows us to stabilize where we want to go, and then eventually look at getting the benefits of a form of an integrated model. Then looking at banking the unbanked, and just before I get to that, from an FNB perspective, what we've done is we've got a bit of a quasi approach to payments. Our products and services are very much customer-centric. And we design the product and we do the delivery channel based on what the customer is looking for. But that is underpinned by a centralized payments protocol. This allows me to manage customer information and manage customer transactions across the different segments. It allows me to address the needs of the large corporate who has got high value, low volume transactions that are relatively complex, to the individual who's got high volume, low value, and very price sensitive transactions, and then also support the government who's got a bit of everything in between. I'm also able to provide an integrated internet platform where a customer, irrespective of your segment, has got access to all of their products within the FNB space. You can use your eBucks from your online profile. I don't need to go and log onto another profile to be able to do that. Then we look at banking the unbanked, and there's so many presentations and there's so much written on unbanked. Nobody disputes. There's a proportionately large portion of our global population that is unbanked or underbanked. And in some instances, it's by choice. There are people that just do not want to be part of the formal banking structure, and that's fine. There are unbanked where it's not necessarily due to choice. It's normally geographically very difficult to service them with the normal banking financial services service models. So this has forced all of us to start evolving and to start looking at our products and what we have out there. So some of the key principles for these products is they need to be simplistic. They need to be reliable, and then use the infrastructure that's already there. And in most cases, that's the mobile phone. So from an FNB perspective, what we've done, and we all know about the FNB e-wallet, I mean, that is localized today. It's within the South African market. We have just under 1 million customers, and we've processed about 4 million transactions. Average amount, 400 Rand. So very big need in that small, smart segment. Then we've also got the eWallet Pro, and you would have seen there's a lot of documentation on it outside. This allows me as a small company to pay my workers at the end of the week or the end of the month if I want to. I can sit on my online profile, I can create e-wallets for each of them, and I can create recurring payments every month. And they can withdraw that money either at the ATM with the PIN that's given on the e-wallet, or they can use a co-branded card. So it's like a check card, it's like a debit card that they can transact on. The next thing we've got in that space is pay to sell, which I think is awesome. So at the moment it's within the FNB space, but I mean hopefully that'll be expanded. But if I just have your cell phone number, I can instantaneously send you money. And I've tested it. The money is available within seconds, and I can withdraw it. It's absolutely stunning. Cardless ATM transactions, once again, there it works on an OTP principle, where people are able to withdraw money at an ATM using a PIN code that's sent to them via their cell phone. On these, we've processed more than 233 million Rand since February last year. And then, of course, the access to the iPhone and the iPad, and then FNB Connect, which we've now one of the biggest, I think we are the biggest distributor of the iPad in South Africa. So that's a different stream for a bank. Okay, so if we look at the future and some new technologies, yes, and there's awesome stuff out there. I mean, doing some research for this presentation, it is amazing. If you go into Google and you look at payments, innovations. So the Square, we all know about the Square. It was launched in 2009. They've just broken 1 million users. It's stunning. I register, my Square gets delivered, I can use my cell phone, or I can use the iPad application, I can use the register, and I'm done, I'm work. It's brilliant. We also got NFC, and in South Africa there's been a few pilots on those. There's been differing feedback on that, but that's definitely a technology that we're going to be using. Transport might lead it, and then from there we'll move on to the other applications. I mean, pricing and fraud, et cetera, those things need to be ironed out, but that's definitely something that's in our space. ISMP, it's actually quite depressing if you think about the amount of time and effort and money we've all spent on streamlining that acquisition process at point of sale. So the card processing process, swipe the card, make sure the slip looks right, et cetera, et cetera. And now with ISMP, it's scanning the barcode, they're already uploading the inventory on the other side, someone pays out the door quick. So here's our little POS device. So I think these things are very disruptive, but they're brilliant. I think they're very good for the consumer as well as the industry as a whole. And I think what we'll see is that in a lot of these spaces, especially on the mobile side, that your convergence is going to be forced by your user. I, as a user, am going to say, look, I want to go into one icon, and I want to have access to my payments, I want to have access to my billing, I want to have access to everything that I'm doing. So for me, from the front end, it looks like it's integrated, but with a supporting back end, strong collaborative model from the service providers.